All right, that's global market action, but how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup look like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. I'm sure you all are in the holiday mood already, but we have to talk about markets. So Vivek, let me come across to you first. What is the market setup for the last trading day of 2022 looking like?
Absolutely. Good morning. All of us looking forward to the break. It's the last trading day. And, hopefully no nasty surprises in today's trading session. Overnight cues are looking quite good. And, this is something that markets will take quite a bit of, heart from. So most of the U.S. indices in yesterday's trading session, albeit on thin volumes, actually saw a little bit of a rally. However, despite this particular rally, U.S. indices are all set to, close 2022 and see the worst year since 2008. Most of the U.S. indices, like we mentioned, gained. The Nasdaq gaining over 2.5%. European indices too, gained, and while the rally wasn't as sharp as the U.S. markets, did end up with gains between 0.2 to 1%. Crude prices continued to dip, this on the back of an uncertain demand outlook, especially as the China open up continues to linger. So Brent futures down almost 1.2%, closer to $82.26 a barrel. WTI futures fell over 0.5% to $78.4 a barrel. Now, yesterday's market, Indian market, staged a very sharp recovery, like you mentioned, especially in the second half of the trading session. So, it'll be interesting to see whether that particular rally continues, especially given the backdrop of a good overnight cues that we've seen. And as you mentioned, very important to see how markets start off the January series, and that will be one of the most important things to watch out for. Asian markets indicating, a positive start, and SGX Nifty 2 is indicating a gap up open for our own markets.
Okay, all right, Vivek, thank you so much for that. So that's about the market setup. But in a market like this, Surbi has been able to point out some stocks that are making news. Surbi, over to you.
Hi, thanks for that. So I have a few stocks on my radar. The first one is Reliance, where Reliance Consumer Products, a wholly owned subsidiary of Reliance Retail Ventures, is going to acquire 51% stake in Lotus Chocolates. It will also make an open offer to acquire up to 26% stake. Eicher Motors, where they announced strategic collaboration in e-motorcycles with a Spain-based company, Stark Future. Eicher Motors will invest 50 million euros for 10.35% stake in the company. SBI Cards and Punjab and Sind Bank, where they launch co-brand credit cards with Punjab and Sind Bank. Craftsman Automation, where the company is going to acquire 76% stake for DR Axion India for 375 crores. And lastly, Saturn Credit Care, where the company receives second tranche of 25 crores from Florentry Advisors.
Okay, all right, those are all stocks that will be in focus today. Finally, let me go across to Mangalam. Mangalam, the Santa Claus rally, as our US colleague said, came in a little late, but it has come finally.
It has come finally, and it has come on the last day of the December series. It was a dramatic recovery that we saw in trade in the second half. In particular, a large part, of course, was on account of short covering because of the call writing that we saw yesterday. But that was about yesterday, and today we're likely to see, trading on thin volume. So let's talk about January itself, because we are saying hello to the January 2023 series. January usually hasn't been a series of big moves because, the average move of the last 3 or 4 series has been just about 0.5% odd. If you just take a look at, the way December panned out, we were lower by almost 293 odd points. This after gaining almost 1,700 points in the previous 2 series. If you just take a look at, the way the markets have moved, we saw a big move of almost 900 points in October, 750 points in November. And as we speak, the rollovers were largely in line at 79% for both the Nifty as well as, the indices that we're talking about. 79% versus the 3-month average of 79%. What, however, stands out is that the FIIs have started, the January series with 1.05 crore shares in open interest, which is mildly lower than the 3-month average of 1.1 odd crores. 57% is the long exposure that the FIs have at the start of January series, and that is something that may make bulls a little happy because now we have some shorts in the system. We started December series with 77% longs, so there was no counterbalancing trade, and we saw the drubbing that we did. In October and November, when there were more shorts in the system, we saw a bigger move because these shorts, obviously, when they run for cover, that provides fuel for the market. But the real fuel for the market would be the cues for January series. What are the cues that we're watching out for? The biggest one, of course, will be the results season and management commentary that begins next week. Before that will be, of course, the pre-results quarterly updates. Pre-budget expectations is something that we'll be watching out for because remember, Feb 1st is the budget. from 15 Jan onwards, we start getting some chatter around it. And also watch out for China and COVID-related updates coming in out there, because that caused a fair amount of volatility in the second half of December in particular. And finally, we aren't yet out of the woods when it comes to the global central bank action and any sort of commentary coming in on inflation. So those are a bunch of things that I'll be watching out for.
Okay, all right. Mangalam, Vivek and Surbhi, thank you so much for joining us and prepping us up for this trading day ahead. Let's slip into a break. Up next, India's current account deficit spikes to a 9-year high at 4.4% of GDP. Details after this short break. Stay tuned.